I've always believed that if we could find the right financial tools, we could drive more sustainable, equitable, and valuable urban development. And what better way to explore that idea than through one of the biggest financial drivers in the built environment: property insurance. Insurance provides peace of mind for a major investment. But what happens when your insurer pulls out of the market because of increased flooding in your area? Or when wildfire risk makes owning property impossible due to sky high insurance prices? How can we continue to build and live in places that are increasingly hit by natural disasters? In this episode, I speak with Alisa Valderrama, founder of Future Proof, a company revolutionizing how we price climate risk in real estate and property insurance. We recorded this conversation shortly after Hurricanes Milton and Helene devastated cities along the southeastern seaboard. But these questions aren't tied to one moment. They're relevant for any climate risk area. And in the months since those storms, developers and policymakers have been asking, how do we rebuild smarter? Together, we explore how accurately pricing climate risk can fundamentally change the way we build and rebuild with resilience at the core. I'm Kate Gasparo, and this is Building Better Cities. It's interesting because we'll talk about climate-focused insurance technology, which is going to be a new term for a lot of listeners. You've worked in the climate space for about 20 years in energy efficiency, resilient stormwater management, and now climate-focused insurance. And as you take a look at each of those chapters, what is the through line for your career?
So for me, the through line has been, I would say, finding jobs that allowed me to constantly refine my perspective and continue to chip away at the problems that I was passionate about. And specifically, how we can use financial mechanisms and the financial system ultimately to solve environmental problems. So that's always been the consistent theme of my career, even though it's had many different manifestations. It's always been trying to get at that big problem of how we can mobilize the economic sector to solve environmental problems more broadly, and then specifically this issue around climate change, obviously being the main one that seems the most problematic lately.
So problematic, yes, because we're, maybe a few weeks to a month out of Hurricane Helene and Milton, both traumatic and devastating in the southeastern portion of the United States. I know that a lot of listeners have their own relationship to climate events and can point to their own story or a friend's story or a family member story. Do you have your own story as it relates to working in climate change and the existing and perpetuating climate events that continue to increase in urgency? Can you sort of speak to that?
Yeah, for sure. I think for me, it's just very, very basic. I was always an environmentalist. And, early on, maybe as a teenager even, I just started to realize that a lot of our economic activity, productive economic activity, I should add, had negative impact on the environment. Even as a teenager, I was just really intellectually almost interested in this question of what needs to change structurally so that it's, you know, not feasible
Mhm.
for consumers to be sold a single-use plastic toy. Like,
Yes.
how do we make sure the cost of that pollution, whatever you want to call it, just using pollution as a catch-all, but the cost of the pollution, how do we make sure that's baked into the essentials of the economy so that that single-use plastic toy, to use the proverbial icon there, is just too expensive to produce in
Mhm.
the first place? And so as a young person, I had this grasping sense that there was a problem that needed to be fixed there. I would say grew up in the 90s. There's peak Earth Day excitement. I was super into Earth Day as a kid. And then someone really rained on my parade one day because they said to me, I remember this. They said, "Oh, Earth Day. That's just the way corporations are trying to get individuals to feel responsible for
Mm.
pollution."
I think that really draws the distinction between, there are individual things that we can do, but if you're only ever offered the plastic toy and you don't have another option, then the companies, the corporations, the structure in place is really
Structure.
doing a disservice to the individuals who are making decisions. And when I look at your career trajectory, you've worked for a lot of institutions trying to shift structure so that people are not set up with bad decisions at the end of the day and they can actually choose for themselves to make better decisions. And so you've worked for the NRDC, you've worked for other large corporations and NGOs that are working at the heart of this. this problem of climate change. And so it's very easy to think of you sitting in a think tank or sitting at a bank and structuring projects that could, be built better. But you decided to launch a climate-based insurance technology startup. I just want to understand, like, what was that thought process like? Insurance itself is a huge structure, and maybe that's where the thought process came in. But
Yeah.
can you just sort of talk through, like, what exactly is climate-based insurance technology, and why did you think your talents were best used in this specific enterprise?
Yeah, I think I have to kind of start with what future proof is because I don't think I would just be randomly in this market trying to build some other type of insurance company. I really feel like future proof is ultimately the best instantiation of what my career told me was like the most impactful thing I could possibly do. So I'll tell you a bit about future proof and then try and answer some more of your question. But essentially, future proof, we're a startup insurance company and we're different in the sense that we're a property insurance company with a mission to facilitate physical and financial resilience to climate disasters. And so, as you and your listeners, I'm sure know, these are becoming more frequent and more severe. Insurers, are sustaining steep losses and in many cases exiting markets entirely. It's just very dramatic. It's been headline news. So there's really strong consumer demand right now for affordable insurance, for any insurance at all in disaster prone areas. And so what we're creating is a new type of insurer that accounts for climate risk and then uses the mechanism of the insurance premium as a way to align incentives for investment in climate resilience.
Mm.
So the way we're doing that technically is that, we're a venture-backed property, an MGA, a managing general agent. It's like an insurance agency with no balance sheet. It's like a beginner stage insurance company. So what we're doing is using our own AI-driven projections of losses from climate events to power our own insurance underwriting and pricing. And so we're bringing a couple of cool innovations to market. We're bringing a granular and predictive view of risk to these markets that really need more quotes. And then we are also, through our technology, we developed an algorithmic underwriting platform. So we provide an instantly bindable quote via API, and it's a price differentiated quote. So we might be able to, again, offer a quote where no one else can get one.
Mhm.
And so the way that links up with me goes back to kind of almost like the origin story of future proof, which is like, what would it look like to translate climate risk into financial risk? And that goes back to that through line of my career. And so I think when my co-founder Alex and I really got down to brass tacks and thinking about it, we decided to focus on the built environment because we thought, well, maybe we could build a model that would take in and address and spit out a projection of climate linked financial losses. We went about building that model by first gathering millions of data points on insurance claims and policies. And you might think, why insurance claims and policies? But if you think about it, in the claims and policy data is captured, right? The essential relationship between, given a climate or weather event of a certain magnitude, how property characteristics modulate losses. So that was sort of the origin story of how we got into, this sector. We initially just started with this idea of, hey, wouldn't it be useful if there was a model that would translate from climate risk into financial risk? And that would be something that, real estate investors could use, property
Mhm.
developers could use.
Mm.
And, we started future proof that way, initially thinking, we were going to be a SaaS company. But, after about a year or so, we realized that the technology we had built was more predictive of climate linked financial losses than the technology that was being used in the property insurance space to price insurance. So
Mhm.
then, of course, we knew we had to pivot to insurance because, what is bigger than property insurance? Talk about structural change. We have a model to price insurance better or differently that can actually really drive behavioral change. And when it comes to something like driving investment in climate resilience, I mean, you read these stories in the newspaper, there's trillions of dollars that are going to be needed to make the world, or even parts of the coastal United States, more climate resilient. In the Midwest, you name it. And yet, very, very little money goes into making properties more climate resilient. And you
Yeah.
think about why that is, it's because the economic case is not being made to anyone, even though a
Mm.
utility, a mortgage lender, a property owner, like, yes, even a property insurer, everyone benefits when a property is made more climate resilient. And yet, everyone's just trapped in the sap, right?
Mm.
No one's investing in that. And the reason is because there's no indication of what the return on that investment would be. So with our model, which again kind of relates how property characteristics will predict losses, we have an opportunity, we realized, to build a new type of insurance company that's really predicated on this notion of A, seeing the climate risk more accurately and in a very
Mhm.
granular way, and then building an insurance company that's able to really holistically look at a property, understand what the risk is today, and crucially, understand what the risk would be, how that risk would go down if the
Mhm.
property was made more resilient.
You talked a lot about the mechanics of future proof, and I just want to maybe zoom out a little bit for listeners who are homeowners or have bought insurance before. What it seems like is insurance companies are not calculating climate risk. And so in 2023, when State Farm and Allstate and other insurance companies pulled out of California and Florida because the severity of climate events did not make it profitable for them to stay there. So, me as a homeowner in California, hypothetically, I'd be paying for my homeowner's insurance. And in the case of a climate event, the insurance company would pay me back for my losses. And because those companies, it seems, weren't able to assess that amount of risk, they weren't pricing that assurance appropriately and then losing when so many homeowners had so many losses.
So I think, you're exactly right, and it's all over the headlines. I was just actually reading a newspaper article this morning. It's talking about since the 1990s, the cost of flood damage has roughly doubled each decade. The federal government issued two disaster declarations for floods in the year 2000. And so far this year, it's already issued 66. And so I think there are
Wow.
a couple sort of issues at play. Climate change is making storms more severe. And then the problems for insurers are really compounded because people have been moving. So it's a demographic problem too. People are moving to more climate risky areas. And so, this really starts to become deeply problematic because, you know, what the exits mean is that, there are more consumers in risky areas. The risky areas are riskier, and there are fewer insurance options than ever before. So consumers have fewer choices, and the remaining choices are typically worse than they would have been 5 years or 10 years ago. And so what this means for a homeowner or even a business is that they're paying more for insurance because the remaining options are higher priced. And for commercial properties, we put this in one of our slide decks, so I have the stats. Since 2017, costs have been escalating at an average annual growth rate of 7.6% nationally. And in certain markets like California, Texas, and in the Sun Belt, it's above 10% annual growth rate for insurance rates. That's just like staggeringly high rate of growth in terms of the rates. And so what it means is that, at least for the consumers are often unable to afford this type of price escalation. So they're
Mhm.
foregoing traditional insurance, they're going on state backed plans. California, we have the FAIR plan, and Citizens in Florida. And these are difficult situations to be in because those plans offer very minimal coverage. It's not a normal insurance policy.
Hmm.
And so what we also end up with is a case in which consumers are uninsured or underinsured. And this is so true in Florida, where we've begun operating as an MGA. A recent Information Institute poll showed that between 15 and 20% of Florida homeowners have no insurance at all.
Yeah, let's talk about the model because the model is sort of like the crux of how you are pricing risk. It seems that there are two components of it. Climate side. So what are the climate events that the model is actually taking in to bear? And I assume that's locality based and also severity and the type of different climate event. And then on the other side, it's what are the resiliency factors of the property? And I assume that the artificial intelligence model is taking those two things, engaging between them to figure out the risk of failure, pretty much, to figure out how much the insurance company would have to pay out in the case of an event. Can
Yeah.
you sort of talk through what market you are piloting in or
Mhm.
that you have been able to see this work in effect? So it gives our listeners some sort of case study as to how
Sure.
future proof has been implemented.
We hear from consumers, pretty frequently that they're trying to do the right things to make their homes more resilient. Maybe in Florida, they got a new roof or a fortified roof, or maybe they've installed storm shutters or hurricane windows, but their insurance costs haven't changed. If anything,
Mhm.
their insurance costs have just continued to escalate. Or
Mhm.
maybe even despite having done those things, their insurance got canceled. And so what we can do with our technology is really reverse that trend. If you have the right resilience features installed, we can give you actually an insurance price that reflects that resilience investment that you've made.
Mhm.
So we'll be able to offer you lower priced premiums. And in some cases, maybe we'll be the only option you'll have for insurance. So right now we're commercializing, as I mentioned earlier, as a managing general agent, which is like a sort of beginner insurance company. And what we're using there is our technology to price and underwrite on behalf of carriers. And so we can, using our pricing technology, we can offer lower price insurance for climate resilient structures. Carriers and reinsurers we work with are excited because they can source better risk. Policyholders who are in the resilient structures are stoked because they can get coverage at better prices. And then brokers and agents we work with can use our API's instant quotes to win essentially new business in less time, and maybe even win business in pockets of the market where they're having trouble. So that's kind of one way that we're commercializing as an MGA. We've also stood up our own insurance agency, which is exactly what you think it is. It's where a consumer or a business is typically going to buy a policy. Our agency is also going to be using our technology in order to assess which leads we expect to be profitable. And then we can sell policies to those leads. Ultimately, there are two ways that insurance carriers are born. One is through a successful MGA, another through a successful agency. So our hope is to have both of those components up and running and proving out our technology in both cases. And I would say on the agency side, we have already 13 insurance partners that have appointed Future Proof's agency, including a lot of brand names, Chubb, NatGen, which is a division of Allstate, Safeco, which is part of Liberty Mutual. So we were getting a lot of positive traction on the agency side, as well as the MGA, where we recently launched and we're now writing commercial risk in Florida.
So the model's only as good as the data is. All these different climate events have varying levels of data, it seems. Is that the case for the model? Is the model more set up for hurricanes? Is it easy to shift the model between these?
Got
Is
it.
the data
I
validity good?
So essentially, we have several kind of models that we've built. One is a hurricane wind model. We
Mhm.
also have a flood model, and we have a wildfire model. So
Okay.
with those three models, essentially, we can write policies in the vast majority of U.S. states by training on millions of insurance policies and claims for the reasons I described before. So for the
Mhm.
Florida program we developed, because that's the most advanced at this point, we're going to give you a lower premium if you have features installed like a new roof or a fortified roof or new construction, hurricane windows, concrete construction, your roof shape, is it a hip roof or a gable roof? Even aside from those features, we can also recognize less expensive thing that property owners can do, like an automatic power shutoff, whole house surge protector, automatic water shutoff device. Our early calculations show that they actually can pay for themselves in the sense that the lower priced insurance we can give you if you have those devices installed helps those devices become essentially ROI positive for a property owner.
Mm.
So, it doesn't have to be you have to rebuild your home out of concrete necessarily to get a lower priced quote. There are some lower cost interventions that also can really help reduce losses. And our MO and the reason we exist is to try and get more and more granular in terms of helping give people the tools they need to make decisions around how to make their properties more climate resilient. If it's just the smart home devices that you can afford right now, great, do those.
Mhm.
Other entities might be able to do more. If you're a property developer, you can do more. But I think we're trying to meet people and businesses where they're at today. And the main thing we're trying to do is just use our technology to be able to give people information they need to make smarter kind of decisions about how they can make themselves more climate resilient. And as an insurance company, I would say the beauty is we can back that up by actually turning around and offering that lower priced insurance ourselves.
Hmm. So that transparency in pricing is pretty key to what Future Proof's core values are. And I could understand as I'm going to purchase a property, I would understand its risk. If I was going to rehab a property, I could use Future Proof to understand how I could rehabilitate a property. And if I was going to build a property, I would know what to build into it. So,
Mhm.
can you talk through how you're currently thinking about Future Proof's role on the property developer side, the property rehab side?
For sure. So in the case, I guess I'll start with sort of new development concept. It's not something we're doing today, but in principle, what we could do is work with property developers to help them understand how they could build a property in a way that would be more climate resilient, and even being able to indicate how the insurance costs would go up or down depending on how they built the property. And so we're starting to talk to some engineering firms today about what that would look like. Because a lot of engineering firms today, design build firms are getting questions from developers. Hey, how should we build? this new commercial structure to make it more climate resilient. And so that engineering firm approached us because they want to be able to tell that developer, if you build it in this certain way to make it more climate resilient, it can also lead to lower cost insurance. So it kind of comes full circle there on the developer side, where that developer can immediately kind of factor in lower cost insurance. Maybe that's something that makes the property more attractive to a buyer, or if they're holding on to it, something they can monetize going forward. So I think the developer concept is a really intriguing one for us, and it's one we're beginning to explore. Then there's a case of again, stick with the commercial example. We're talking to that same engineering firm about how to retrofit properties that are already built. We have a current case study we're writing up of a property owner that has exposure in Florida to some flood risk. They are the owners of a big box store in the Miami area. And so there's a flood protection device. In fact, this is the same flood protection device that we just saw recently. Some of the photos of Tampa General Hospital had this particular flood protection device
Yes.
deployed. There was a very high profile picture to protect it from hurricanes Helene and Milton. That same flood protection device, there's a big box owner down in Miami who's thinking about installing it. And the cost of the flood protection device is known. It's about $500,000. It goes around the perimeter of the property when there's a flood or a predicted flood. But what is unknown to the property owner today is how much insurance they could save, how much insurance savings they would benefit from if they installed that device. So now the engineering firm has been working with us so they can go back to that property owner and tell them, yes, the device costs $500K, but Future Proof says that you'd be able to save over $100,000 a year on your insurance costs if you install that
Whoa.
device. So suddenly that flood protection device is like a no-brainer, right?
Mhm.
It's like, imagine without that guarantee of insurance costs, the flood
Mhm.
protection device is like a maybe.
Yeah.
So that's a kind of really stark example. It's a real example. And that's the kind of thing I think we're very excited about leaning into in the future.
And then in terms of the rebuilding case, it's probably not something that people want to talk about. There's a lot of, hesitancy and controversy around managed retreat from these areas where over a long period of time people are moving away from climate risk areas. Does Future Proof have a way of speaking to that issue and that problem?
And I think the concept for insurance, which is intriguing, is that anything is insurable at a certain
Mhm.
price. So people can continue to build in very risky areas. It would be smart to build there in a more resilient way, but ultimately the insurance is still going to be astronomical.
Mhm.
If it's right on the coast in Florida, you probably won't be able to get insurance if it's wood frame construction or if it's old construction. Even building new, it's not the case that it's going to be low cost insurance no matter what.
Mhm.
You can guarantee that the insurance cost in that case would be high.
And you'd still be able to price risk if they were to add in resiliency features in those high climate risk areas.
Would a very, very risky property be made less risky enough that the premium would be something low enough they'd want to pay? I don't know.
Yeah. This sort of like leads to my next question. When an individual property owner can't take enough resiliency measures to bear for it to be consequential, is there a case in which a lot of property owners could pool together within a city, say, or a township and make larger resiliency investments? I'm thinking at the scale of what Venice has to do for its own flooding, or even on coastlines in North Carolina where they use different erosion techniques as a city measure beyond a single individual property to be able to protect and build more resiliency into the overall landscape and ecosystem.
100%. Yeah, I think that's a really exciting sort of future direction that insurance is going to go to. I mean, I think if a city were to make these infrastructure investments, it could absolutely bring down premiums for homeowners and others. A city could invest in like mangroves,
Mhm.
to reduce hurricane wind speeds, storm surge, you name it. So today we don't have cities as clients, but I come from energy efficiency finance and renewable energy finance. And there's some very creative structures that were deployed there, like property assessed clean energy, that does give a municipality sort of the ability to levy a fee on property owners in exchange for improvements that are made that benefit those property owners. And so, a property tax assessment never sounds that great to anyone. However, if that is going to enable a whole community to get insurance or to lower the insurance cost for a whole community, I think we're at a point where people might actually be willing to go there. So I think we're at the beginning. I mean, I would never 10 years ago have imagined that people would have been willing to sign up for that type of thing, but I'm delighted that maybe that there's some daylight for ideas like that. And I think future proof in the technology we're building, I'm hoping will be, a real catalyst for making those projects possible because of the technology we have around exactly how much premiums could go down. That's the key to making those programs attractive, even from a political perspective, right?
Thanks for tuning in to Building Better Cities. If you enjoyed today's conversation, be sure to hit subscribe so you never miss another episode. And if you could help spread the word by sharing with someone, it would mean so much to us. To learn more about our work, check out buildingbettercities.com. We're excited to keep the conversation going, so until next time, let's keep building better cities together.